I want to welcome Adrian Manz. Adrian Manz is somebody that I've been working with for a number of years. He's on the line right now. I actually have a signed copy of his book in my hand. It's a really good book. Lots of pictures, lots of examples, and it's called Around the Horn. He also runs a company called Trader Insight, and is here to talk to you a little bit about his patterns and the scans and the stuff that he looks to look at. So, Adrian, let's go ahead and make sure we can hear you.
Okay.
What do you want to? I can hear you. You sound great. What do you want to say? What do you want to tell us about yourself as a first impression? No pressure.
All right. Well, so we are a, when I say we, I mean my wife Julie and I, so we're a husband and wife trading team. We've been doing this since 1996, I guess, really. We've been trading the equities markets. And you know, we love it. It's our passion. We trade for ourselves. We trade in a fund. We trade with clients who have been trained by us. We do a big trading boot camp. Sort of our whole life our life's work has been about trading the markets, and you know, we've really managed to focus just about everything that we do around. You know, around the equities market. So I'm excited to talk to you guys again. It's been a while since I did one of these things with MetaStock. I love the scanning software that they have for my patterns, and I just wanted to dig right in and get going. I'm going to cover one specific pattern that the scanner goes through and scans for. It's a real core pattern in what I do, and I think that by the end of it, you'll be able to take some of these ideas and just go work with them starting first thing tomorrow morning.
Perfect. I didn't mean to cut you. We can see your screen.
Okay.
Yeah, I'm just going to get out of your way. So,
all right,
go for it.
So the one that I'm going to talk about is called Fastball. It's an expansion of range and volume pattern. For those of you who haven't read it, I know the book's been around for a long time. Both of these books have been out here for a long time. It was Around the Horn, The Trader's Guide to Consistently Scoring in the Markets, and then Trade Secrets, Powerful Strategies for Volatile Markets. The pattern I'm going to talk about today is sort of the foundation. It's the cornerstone of Around the Horn. Around the Horn has a bunch of other patterns that build off of this. And then Trade Secrets was a book that was all about just this one pattern. So I really have taken this one and you know, exploited it over the last 20 years, and it's really the core of our trading business. And I think if you focus on it a little bit, you'll see why this can really be a big thing in your own trading. So the book Around the Horn, that one was written about market cyclicality, right? So I know it's got the baseball analogy, and everybody says, "Oh, you must be the biggest baseball fan in the world." But really what Around the Horn is about is markets moving through phases of the liquidity cycle. So individual stocks and sectors lead the moves. Ultimately, the entire market follows through with it. And what we're looking for are the patterns in the book are just giving us signals, and we're just doing what the market tells us to do every day, right? So we're looking for accumulation. We're looking for markup. We're looking for markdown. We're looking for distribution in the broader markets. We're trying to stay out of the market in a particular stock during a period of accumulation or distribution, and we're trying to capitalize on things when they get going, right? So when you have a markup or a markdown, those are the best times to be trading, at least the style of trading that we do. So in Around the Horn, like I said, there's a bunch of patterns. The one we're going to talk about today, Fastball, that's an expansion of range and volume. But as you go through, if you've read the book or if you look on MetaStock has, with the plugin, they've got great descriptions of each one of the patterns. So if you're kind of a, you know, just get it and run with it kind of a guy, you can look at the explanations on MetaStock and the videos on the MetaStock site. You don't even need to buy the book, and you'll see exactly what it is that each one of these is looking for. But you've got Fastball. That leads, generally speaking, to an exhaustion move later called infield fly. We've got line drive, that's basically a gap and go on a daily chart that we trade intraday. 3-2 pitch, that's a failed fastball that pulls back in. backdoor slider, that's a fastball, expansion of range and volume on a daily chart that's followed up by inside bars on the daily chart. Switch hitter, that's my version of a ratio pullback, Fibonacci pullback. And all these things, all these patterns come together and play out in any time frame on any chart of any equity or any index that you're looking at. So if you go and pull up a chart of the Dow, right, for any period in history, what you're going to see is all these patterns play out. That's a fastball, right? That's followed by an infield fly. That's followed by a switch hitter. Switch hitter's followed by another markup and another switch hitter pullback. Then we get a line drive move. Then we get a big 3-2 pitch inside move. Then we get a backdoor slider move on the heels of another fastball move. Then we have a double header setup, right? And you just keep going through. Here's another infield fly. And what you do is you keep spotting those things on your charts, and then it just tells you what phase of the liquidity cycle you're in. And in that case, that was the Dow Jones Industrials. I just used that to not cherry pick any particular stock, right, to show you that this happens in the broader indices the same way that it happens in the individual equities. And once you focus on following what the markets are doing instead of trying to cherry pick particular patterns, I think it just makes it a whole lot easier to stay in business over the long haul. I mean, we've been at this a lot longer than most people are ever at it, and I can tell you that the discipline has been the core driving force in our success, right? Staying disciplined and just really ratcheting down and making sure we know what's going on in the markets and with our patterns. So this is the kind of record keeping that I do on the patterns that come up on my trading plan, right? So you guys are all, at the end of this, I'm going to give everybody a month of full access to Trader Insight. You don't have to give me a credit card. You don't have to know nothing. Just go fill in your email address, your first name and your last name, and you're immediately going to get a response back giving you full access to the site for a month. And that full access will get you access then to all of my trading plans all the way back to 2006 and all the historical records for every single trade that's ever triggered. So I've had people tell me that, well, I can't find your results, I can't find this, I can't find that. It's all right there on the login page that you're going to have. You'll have access to all this stuff. But the pattern that I'm going to talk about today, fastball, the expansion of range and volume, you can see in that chart on the top left where it says pattern distribution, the blue wedge is fastball. That's how many times did I find the pattern when I was scanning for patterns during the year. How many times did fastball, the expansion of range and volume, come up? Then you scoot over one chart, triggered pattern distribution. What the triggered pattern distribution tells you is, all right, fastball was the one that was found most frequently. Well, how many times did fastball trigger compared to the other trades? And I just want to make sure here that my triggered pattern distribution looks a lot like my located pattern distribution, right? That way I know I'm not cherry picking trades. I'm not going out looking for fastball just because it happens to be what I like to trade. And then if you just go through here, right, so that tells me I'm not introducing any kind of a bias, right? I'm not doing we call it, I'm a psychologist, my wife's a psychologist, right? That's how we were trained. We got into trading during graduate school and did a lot of research on trading and did a lot of number crunching on trading. So a lot of what we talk about has sort of a psychological bend to it, right? The war room that you're in every day is not the market. The war room's between your ears. This kind of analysis makes it real easy to keep that stuff in check. So I see that my triggered patterns make sense given to the distribution of patterns that I found. Then I scoot over another. I look, oh, look at that. I was mostly short in 2016. Well, if I look down, I can see on that next chart lower, most of my profits also came from my shorts, and my long side profitability is also proportional to that pie up above. So all that this data tells me, right, is that I'm trading right, or that I'm looking for the right opportunities in the market, and that I'm not biasing things based on what I like to do. I'm biasing things based on what's actually happening. So everything here looks the way that I want to see it. This, again, you can go back, you can look at every planned trade all the way back to 2006. You can look at the result for every planned trade since 2006. And this portion of the analysis that you'll be seeing is strictly for the part of the trading plan that you're going to get called the around the horn plan. That part of the trading plan is the one that's the most replicable. It's the one where you've got an entry, a target, a stop, and 2 money management rules. These results reflect either the move from the entry to the target, or the move from the entry to the stop, or the move from the entry to 50% to the target and then back to break even and out. It never reflects any kind of an extension. We never do maximum favorable excursion, all that hocus pocus, oh, here's what you would have made. This is, if you plugged it in, you automated the trade, these are the results that you should see. Okay, so with that in mind, let's get right into that big portion of the pie, fastball expansion of range and volume. These are big opportunities, especially when they happen on the short side of the market. You know, it's just the market collapses a lot faster than it climbs. It doesn't matter that we're moving straight up right now. That has no impact whatsoever on whether or not the shorts are going to make sense. You're going to see a lot of trades here from the past couple of months where they're on the short side of the market even though it's climbing, and we go straight to a profit target, right? Or we have alternate entries that go and make money for us. That's because even when something is climbing at an uncontrollable pace, right, sooner or later it'll turn around, it'll hit resistance overhead, boom, comes right back in again. That's where the opportunity on the short side is. This is a short side and a long side trade. So I'm going to show you the short side setup here in a minute, and just bear in mind it's just the opposite for a long, okay? So in the case of the short, we're looking for the widest range of the past 10 sessions. We're looking for typically the largest volume of the past 10 sessions. For the short side move, I want to see a close down in the bottom 25% of the bar. Ideally, I'd like to see this open in the top, at the very top of the bar, close at the very bottom of the bar, big range, big volume, right? That indicates to me that there's institutional activity that's very, very likely to carry over into the next trading session. The following day, these are all day trades, right? All intraday stuff. We short it 10 cents below the low of that expansion day bar, and we target underlying support on a daily chart. So all my profit objectives that you're going to see when you're looking at these trading plans for the next month, those profit objectives are all derived from support on a daily chart. The intraday stop losses are all from a 5-minute chart. So I set my stop loss from support and resistance in the time frame that I'm going to trade, and I set my profit target from the larger time frame. The idealized version of this, and again, you would just flip this whole thing on its head for long, okay? You've got a fastball short sale opportunity here because you had a trending move lower, then you had a pullback, then you had what's hopefully not just the widest range, but also the biggest volume of the past 10 sessions. This one opens high, closes low. These are daily bars. That's what you're having MetaStock scan for, is the daily, the pattern's going to be on a daily chart. And then the next session, we're just going to look on the intraday 5-minute chart. We're going to look to get short below the low of this daily bar, 10 cents below the low, right? And then we're going to target underlying support and resistance. So the way that I set this up in my MetaStock Exploration, right? So this is, I assume a lot of you have the plugin, or you're thinking about the plugin. But for fastball in particular, right, I just go to ATH, that stands for around the horn, ATH, fastball. I only scan NYSE. I like trading on the New York Stock Exchange. I think NYSE and NASDAQ are different animals. They always have been. NYSE listed securities tend to have better sort of respect for support and resistance. It's more predictable because you've got one designated market maker who's responsible for what goes on with the stock versus, you know, tons of market makers on your NASDAQ securities. That's just my preference. You can scan anything you want with this, so you could just as easily just add NAS to that NYSE scan, and you're off and running. Then what happens in the case of NYSE, right, is you're going to process about 4,727 stocks, and in about 10 minutes time, I'll say what MetaStock gives you compared to, there's been scanners written over the years. Numerous companies have licensed my patterns for their software. MetaStock does the very best job, hands down, of finding patterns that look textbook correct. Okay, so they really go through and scrub the market and look for an exact match to the pattern. Now in my case, what I've done is I loosen it up a little bit so that it's not quite as exact, because I want to see more data. So you can go in and you can tell MetaStock to scan this stuff exactly as per the examples in the book, or you can say, you know what, I'm gonna loosen this up, and maybe what I want to see is things that have a giant range on the session, but maybe the volume's not the biggest it's been, or maybe the open and the close are down a little bit in the range or up a little bit in the range. It's up to you. You can definitely run it by the strictest criteria and get the shortest list, or you can open it up a little bit so that you get some more trading ideas for the next session. But that would be the list now that it's given me as possibilities for tomorrow, right? I just look through it real quickly and I say, oh, I've got some home builders, right? So, Toll Brothers is in there, Meritage is in there. So, in my head, I'm also going to, when I'm looking at charts, I'm going to look at Horton, I'm going to look at Beazer. I'm going to start pulling up a bunch of home builders just to see what's going on, see if there's something in the sector that I can capitalize on. All of the ADRs, that kind of thing that comes up, I wind up just taking off the list, right? I'm not really interested in trading those. A lot of the oil and gas stuff I don't wind up trading when it's on here, because those can be very, very volatile on the opens. It makes it tough to do them as opening trades, but certainly over the course of the session they wind up being valid as well, so you can have those as sort of secondaries on your list. Now I'm going to show you my trading plan, the way that I put it together from this list, right? When I go through and I look at my charts and I create my short list for the next day, this is what the trading plan is going to look like that you guys will have access to for the next month. You get a stock, and in this case this was Yelp, and we know it's a fastball, so it's an expansion of range and volume. This was a long position, right? It's 37.67 on the entry, so in the case of a long, we're going 10 cents above the high of that bar that made the expansion move to the upside. My stop is 37.22, right? You're going to find that. You're going to take that output that the scanner gives you, and you go down into a 5-minute chart. You find support and resistance. Boom, $37.22. If it violates that price, I'm looking to get out of the trade. My initial target, $38.19. That's again from a daily bar. My ratio on the trade, 1.16 to 1. I just always want to see that be better than 1 to 1. And 50% of the distance to the target is $37.93. So $37.93 is where I'm going to move my stop to break even. If I get into the position, it's making a move to the upside. Once I'm in, if I get to $37.93, I move my stop to break even. If it gets back to the entry price, I'm out. That's my money management rule. Then we have the support and resistance lines. These are floor trader pivots, right? You can go through and just plot those on your chart or have them plotted on your trading software during the day. I'm going to show you what I use those for in a few minutes here, because there's the plan now looks a little bit different than what I'm showing you. I've included a bunch of inflection points that we use to find opportunities during the day. But here you see, right, this is the trade as it's actually going off on my computer, right? I plot the lines on my screen, and I just have those set up as entry points, and then over the course of the session I can just move those lines around and it changes my orders. So I've got my long entry, 37.67, right? 50% of the target, 37.93. As soon as I hit $37.93 in my trading software, I just pull that 37.22 stop up to 37.67. Now I've got a risk-free trade. My target, $38.19, right? And all that expansion up above there, up to 39.60 or so, you will not see that reflected in the results of the trading plan. So if it got me in 37.67 and it hit that target at $38.19, that's the way we book it. So, that's always a ton of emails that I get is, why aren't you going and trying to capitalize on this? Or, geez, it ran through the target so fast you almost couldn't have got out of the target. You would have had to have more than this. Why didn't you do it? It's because we book it in the most replicable fashion possible. So we book it right at the levels that it hits. So here's another one, this Domino's Pizza. Now this one's on the short side of the market, right? So look at that far right bar on the inset screen there on the trading plan, you can see it's the widest range of the past 10 sessions. It's the biggest volume of the past 10 sessions. Here's what the plan looks like, right? Again, expansion of range and volume. It's a short 158.84. That's going to be 10 cents below the low of the bar that created the expansion. 159.39. That's my stop from an intraday 5-minute chart. My target 158.10. That's going to be from support on a daily chart. 1.35 to 1 is my reward to risk ratio. 50% of the distance, 158.47. If I hit 158.47, I'm going to move my stop to break even. And here's all the floor trader pivot lines that I anticipate hitting on the way. So, here's what this one looks like. And, they're not all, these are not all going to be moves straight to your profit target. But what you're trying to do is lock things down. Here's your short sale entry level, 158.84, right? It gets down 50% of the distance to the target, comes back up, gets you out at break even, gets you back in again, right? The fourth bar, the fourth 5-minute bar there, again, right to 50% of the distance to the target, goes back up to the entry level, you're out flat again. So you had 2 break-even entries, and then it goes and it plows right through the profit target, right? So I didn't get the third entry because we take 2 entries on these on the trading plan. I missed an opportunity, but the thing that's important to me is I followed my rules. I knew exactly why I was getting in. I knew exactly why I was getting out, and that's the thing that to me makes the day successful. Did I do what my plan told me to do? Not did I make money, did I lose money? That's important over the long haul, but the first thing that you have to do is overcome the tendency that human beings have to second guess this kind of stuff. So once you get into the plans, right, you're going to see a lot of these names start popping up over and over again, and a lot of these patterns are going to jump right out at you. So again, you don't really need MetaStock to scan to tell you that this chart of Xylem has an expansion of range and volume over on the right side, but you had to sort through 4,000 symbols, flip through 4,000 charts to figure it out on your own. So it's nice that you're getting this scan output and that you're able then to go through and just go through this little sweep list every day and set these up and not have to spend as much time as, a lot of times I'll flip through the charts just because I want to get sort of context on the entire market. But in this case, right, Xylem, $46 and 57 cents is your short sale. 46.97 would be the stop. 45.97 the initial target, and 50% to target, $46.27. And again, the important thing to take away here when you're looking at this is always, the rule for getting in. It's going to be 10 cents below that daily setup bar. And then the only things that you have to focus on as you're setting up the trade, your stop is going to be from the intraday 5-minute chart, and your target is going to be from the daily chart, right? So it becomes very second nature. The guys who go to boot camp, they love this trade, right? This is always the one that they want to lean on the hardest. They have a heck of a time learning how to set it up, but after 3 days of working through all these patterns with these guys, most of them go home and they're able to take their trading business and turn it into something that they want it to be, as opposed to whatever it was before they came. And it's a very simple thing to focus on. You just need to do it. You need to get down in there and just dig into these charts every single day and know what it is you're looking for and why it is you're looking for it. So again, look at those support and resistance levels there, and note especially that the central pivot is at $47.63. Okay, so this is a short, and we see that we've got a pivot above us and that we have an S1 level below us once this trade is established. So what's this telling me, right? Here's the setup day. So this is the day that you're looking for to establish your stop loss, right? This is the chart you're going to. And you're drawing a bunch of lines and you're saying, look, these are the levels where support and resistance happen. So MetaStock gave me a bunch of output, and what I need to do is go through and figure out where things are likely to happen. So one of the things that I like to do is see if that support and resistance overlaps with anything else that's important that's going to happen the following day. So your setup day here is 2/6 of 17, and remember from the trading plan, we saw a central pivot for 2/7 of 17 that was going to line up at 47.63. So if you're looking at this, what you can see is you've got a support and resistance line that's sitting right about at that same level. Then if you go through and you plot your Fibonacci levels, right, you can also see that there's a 382 retracement that's going to happen right up there at $47.74. So what I look for when I put my plan together is not just that core, the core entry is the only one that I'm going to book. It's the only one that I'm going to share in the spreadsheet. But there's these other entries, right? And you're going to see us doing these in that first hour trading pit every day. You've got access to that too for a month. And you can come in and you'll hear us talking about these other levels that are now part of the trading plan. And all right, we're going to take this entry early. We're looking at this, $47.63 level because there's a bunch of overlap right there. And what you'll see happen is, right, you can see the following day on trade day, this is 2/7 of 17. We got up to that 47.74 level, reversed lower, and look right there, 47.36 was the target line, and the stock went right down to that level. This is a trade that didn't trigger on the session as per the trading plan. The regular trade didn't trigger, but we found the opportunity for another entry just by doing some additional homework. Here's VFC, same thing, right? We've got a fastball short side setup, right? 48.08's the entry. We know that's 10 cents below the low of that big daily bar. 48.45 is our stop loss. That's from an intraday 5-minute chart. 47.60 is the initial target, right? We know that's from a daily chart. Ratio 1.3 to 1. If it gets down to $47.84, we're moving our stop to break even. Again, shift over on the plan. Look, where's the central pivot? $48.67. So if it goes up to 48.67, maybe we've got the opportunity for an early entry. Well, if it gets down through the entry price and hits 47.83, we know there's likely to be a bounce. That's right at the 50% target level, right? So we might see a drift back higher into that opening range. So we can use those pivot lines for a bunch of things over the course of the session that help us handicap what's going on. So here's your setup day. Right, goes and we get a central pivot and a fib overlap right at all these support and resistance lines, right? So you've got 48.65, 48.82, 48.42. You should see those. You should see exactly why I drew those lines where I did, right? That's really just nice basing over the course of the session. 48.67 was the pivot. 48.69 is a 382 pullback on the session. It tells me there's a lot of confluence right there at that level, and the following day, right, look what happens. It gets up, gets right up into that 48.84 support and resistance. That one overlaps with the fib level, right? So we're just looking to get lots of these early entry opportunities. That one moves down, $48.42. Comes back up again, drifts lower right through that pivot line, right? Another opportunity for an early profit. Doesn't get down as far as the first one did, but even though it reverses, we still have the opportunity to pull 15 or 20 cents per share out of the market, and that's what we're doing all day long, right? Is looking for opportunities to grind some extra income from opportunities for profit. So each one of these, now this section of the plan I recently changed, so it doesn't look like this anymore. So everything on the plan now has a uniform look and gives you those levels. But this one was from February the 10th, right? Cabelas, we see we've got the same kind of a setup. It was just a second portion of the trading plan. These are like my secondaries, right? These are the stocks that I'm looking to if opportunity in my core portion of the plan isn't there that day. This is my go-to list. Now, I don't book these profits anywhere that they can be found because these have much more discretion in them, right? Because it's a maximum stop that we're looking at, not a hard stop. And there's discretion that you're going to see in the rules for the trading plan as to whether or not you wind up taking these trades. But no matter how you set these up. So these would be like the trades that you're setting up with your MetaStock scanner, right? What you want to do is go through, dig around in these charts, figure out if there are additional places that you're likely to see something happen, you're likely to see an inflection, figure out if that pivot line, either the central pivot or one of the resistance and support lines, line up with any of those levels, and then take a look at other things that you consider important. So for me, I like to do a fib study on these things: 382, 50, 618. Those are the levels that I use. And if I see that overlap with some of these support and resistance lines or the central pivot, then that gives a little bit more credence even to what I'm looking at. Just bear in mind, if you're doing a fib study and you're going from the peak to the trough, and that happens to be the entire day, right? If the peak was the first bar of the day and the trough is down at the bottom like this, then your 382 fib line is always going to line up pretty close to that central pivot, because the central pivot is your high plus your low plus your close divided by 3, right? So that's about 30. That's 33%, and your first fib line is going to be 38.2%. So it makes sense that you're going to get a lot of confluence there between those things. But sometimes on shorter sweeping moves lower, that doesn't wind up being the case. It'll be the 618 lines up or the 50. But one way or another, I like to see some overlap between support and resistance and something else. Right here again, Cabelas, you're going to see these. We do these every day in the room. Every single day we have this kind of a setup. This one came up, got up through our 50.71 level, didn't make it through that central pivot, bounced right off that 382 line, came down, and just made a big drifting move from 50.71 down to our support and resistance at $50.14. So here's another one from the way that I had the plan set up. I guess this is just to show you there's opportunity every day in these things, right? Herbalife, fastball, short side setup. This one wound up being on my stocks to watch list because, as you can see on that chart there, it's a little bit higher up in the range. It's about 30% up in the range on the close. I like Herbalife as a stock to trade. It just makes big moves very regularly. It's got a lot of news around it, a lot of stuff that drives price. But here it is again. I just take that setup, I drill down, I look for all these support and resistance levels on the intraday chart, because I'm looking for them anyways, right? It's not that much extra work, because I'm looking for these levels to set my stop loss on the plan. Well, now, once you're in there and you're setting your stops, it's not so hard to go and say, all right, well, where's some additional support and resistance? Where are the fib lines? Where's my central pivot going to be on the next session? And then when the day opens up, right, here you've got another one. It opened up in the range, opened flat from the prior session, right? You've got a nice open that gets you up above the pivot line, and then, it's 20, 30, 40 cents you're making on these moves, but that really adds up over the course of a day, because you get probably 3 or 4 opportunities in just about every one of the stocks that you've got on your plan. Right, here's another one. So this is the new version. So this is what you're going to be seeing when you look at these setups on your the free 30-day membership. The new plan looks like this, very similar to how it's always looked, but out on the right side, I've gone through and put the support and resistance levels that I found, and I put the confluence levels. So I did that because the guys who come to boot camp, they like to ask me if they're finding things that are similar to what I'm finding, and it's just easier to have this built right into the plan than it is to answer 10 emails, 15 emails every night. And also, we've got some guys who are trading, they're trading our money for us, and I like to make sure that they're on the same page that we're on when they're doing these trades. So now you've got the benefit of all that stuff built right into what you're looking at for the next month. In this case, Molina Healthcare, the levels out there on the side. We see it's the the gouge sheet here for the plan shows us that it's a short 46.61, right, is the entry. Stops up at 46.94, target 46.01, 50% of the distance 46.13. We know what we're going to do there, and then we've got all those pivot lines set up as well. So here's an example of one that did go in our favor, right? I try to show you things that didn't play out the following day to show you there's still opportunity. But here's one that wound up going in our direction, and by staying alert, right, in this case you managed to get in early. You're not going to get that first bar. You're not going to get that 47.25 reversal. But if you're sitting in front of your computer, you sure as heck better see that the second bar is going to make a move down through 47.08. When it does, that gives you the opportunity for an early entry, and that adds an extra 30-40 cents to your bottom line on the session, even as the stock goes down and moves to your profit target. Here's another one. You're going to see the stocks to watch section now looks just like the regular part of the plan as well. So everything now has a much more uniform look than it used to. But in this case, we had EXR, right? This one's on the trading plan quite a bit. This is an equity REIT. You've got a 76.10 entry, your maximum stop 76.66, right? Initial target 75.26, 50% of the distance. I'm moving my stop to break even. The pivot line $77.14. So without drawing the lines again, right, or without going through that exercise, we can see that a move up to 77.13 in the first bar. You know, again, you're not going to catch that in the first 5 minutes because we're looking for other things, right? We're looking for those opening gaps. We trade a bunch of stuff in the first hour trading pit. But by the time that second bar happens, right, you've had 5 minutes of market data go by. Second bar opens, $76.79 is the level you're looking for on a support and resistance entry, and $76.37, right, is the first target on that. Again, you've got a really nice opportunity there. You know, in this case, for a pretty sizable profit. So all of these, right, you can just see as we're just going through day by day on these trading plan setups, all of these give you multiple opportunities to get in front of a potential profit. So each time that I have a stock that I'm looking at on my plan, I'm going and trying to say, look, I know the easiest thing to do is just program this thing up, bracket the order before the open, and if AIV opens, trades down through 43.65, I'll be short. If it goes up to 43.86, I'm out with a stop loss. If it gets down to 43.34, I'm taking the profit. And if it gets to 43.50, I'm gonna have it move my stop to break even. That's the easy way to do it. But like I said, the more lucrative thing to do is to go and pick it apart the day before. So if you look at the day there labeled 3.9, you can see where all the support and resistance lines were drawn. In that case, there were 2 down low in the range and 1 sort of up high in the range. It went all the way up to that 44.46 level, reversed, came back down again. Like I said, I'm just going to tell you, I would have missed that first entry. But as it comes down through the pivot line, you've got the opportunity for a 44.16 short with a stop right up above that line, right? So we're never giving those wide berth, right? Those are always, if I'm getting in on one of the support and resistance lines, it's always like a 15 or a 20 cent stop. I'm never giving it a whole lot of room up above there. I just want to see, is it going to crack that line? Is it going to move in my favor? If it's going to move in my favor quickly, I'm in. Otherwise, I'm not going to look at it. So in this case, $44.16 gets you a move down into the tail of the prior day's range, right? So you're right down into that 43.70 level. And then from there, you've got the rest of the trade playing out as per your plan. And here's one from today, right? Again, as I said, I've now made it so that the stocks to watch portion of the trading plan looks a whole lot like the rest of the plan. And here we see this was a long entry. So we've got a long. We're going to have all these confluence levels, right? So if there's a ton of them, you're going to see them off on the right side. I put them in exactly where I see them. We had planned on this one a long entry, $81.33. Our stop was $80.74. The initial target, $82.03. 50% of the distance of the target, $81.68. The rules for entering these things are in the trading plan. So I'm going to repeat it again, just because we want to drill this. But you want to get in this case, right? You're potentially taking a trade $81.33 on the long side. If things go against us, our stop loss is based on what happened on the setup day on a 5-minute chart. So 80.74 was the support and resistance from an intraday 5-minute chart. The initial target, $82.03, that's overhead, support, and resistance from a daily chart. The ratio on the trade, that's just how much do I stand to gain versus what's my potential loss. 50% of the distance to the target, just halfway between your entry and your target. And what are you going to do when you hit that line? Move the stop to break even. Our goal is, whether you're trading your money, my money, paper trading, whatever it is you're doing at this point in your life, you want to make sure you get to risk-free on any position you're in as quickly as you possibly can. Here we've got the trade day playing out. So we're not advancing here. Let's see what's, there we go. Here the trade day plays out, right? And we can see the stock came down from above, right? We didn't get the long side move that we were expecting. Stock moves down, hits that central pivot line, right? $80.42, right up to that support and resistance that we anticipated, $80.69, right? So there's 27 cents of profit available there. Comes back down again, hits that level from below, comes up through the spot 42 level, straight up to 69 again. There's another profit. Now, if you're only trading the first hour, you're done. But then later in the session, right around the New York lunch, comes down, moves up through that level again, and hits the profit target on the bands for a third time. So drawing those support and resistance lines for the day was the difference between a trade that did absolutely nothing, right? Doesn't get you in, doesn't do anything at all for you, and a trade that gives you 3 opportunities for a potential profit. So that is the gist of how I set these things up. So if you have the book, then this is a modification to the book, right? The book was written in 2003, and it just goes through the core version of the trade. This is what we're teaching the guys who are trading for us. This is the core of what I'm teaching these guys at the boot camps when they come, and you know, we build out a lot on top of this yet, but if you just get this down, I think you're going to be very, very happy with the results that you have. You know, especially if all you need to do is run that MetaStock scanner every day and get a list of candidates. It really takes a lot of the legwork out of putting these together. So again, the reason we're looking for this on the short side of the market today is not because we're going to bias it. I showed you a ton of trades. I showed you the longs. I showed you the shorts. It works equally well on both. It just happens quicker on the shorts. You're capitalizing on markdown by institutions. They tend to retrace into the range before they move lower. That's why you're going to draw the lines and figure out how to get in and out of these things with some of the momentum intraday. You really don't have a better indicator of what's going to happen than whether or not institutions are liquidating after distribution. So once you see this pattern set up, it tends to play out over the course of a couple days. Tend to have really good price action on these during the session. When it triggers, you've got a very high profitability ratio on them, and those pivot lines, fib levels, volatility bands that you're drawing on your charts, those make a great pattern even better because it gives you the opportunity to get in early and capitalize on some of the additional move. So, you know, whether it's long, whether it's short, if this happens, you know, during that cycle, during those market cycles, if you're not picking it arbitrarily, if you're not going through and cherry picking a pattern just because you like the pattern, then, you know, this one I'm going to say is the best place out of everything that I teach people how to do to start. So here is the free 1-month membership that I told you about. All right, if you want to do this, like I said, we're not taking your credit card, we're not going to call you, we're not going to badger you. The emails that you're going to get, you will get email based on this thing. You're going to get an email that tells you, here's your username and password, with a welcome letter letting you know how to access the materials on Trader Insight. And each day, you're going to get an email that tells you Adrian's trading plan for tomorrow is ready. You can click here to download it. That's where you get the trading plan. And then in the morning, before the market opens, you're going to get an email that says the market's going to open in a half an hour. click here to enter the room, and then you can come in and watch, watch what everybody's doing. And most of the guys in that trading room, there's usually about 20 people in there. Almost everybody is a boot camp alumni, so these are guys with very high levels of training. These are guys who know what they're doing, and you can sort of look over their shoulders. They're talking to each other about taking these trades. It's going to make for just a really good kind of a learning experience for everybody. I think you really enjoy it. And if you have questions about running the scanner or questions about the output on the scanner, I will happily go through that stuff with you after the first hour of trading is over. So with that, I would love to do some question and answer. I think I left enough time here at the end so that we can go through some stuff yet and see if there's anything you didn't understand or anything that you need a little bit of clarification on.
Okay. Adrian, can you hear me okay?
Yeah, I hear you.
Okay, yeah, we do have a couple questions, not a lot. If you have some questions for Adrian while he's in here, make sure you type them out here. We do have a question from Kenneth that came in that says, can you swing trade your setups versus day trading them?
Yeah, so you can use these in any time frame. So that second book there, Trade Secrets, that we didn't really talk about, is all about taking the setups and trading in multiple time frames, right? So the fastball setup as a multi-day setup is going to be very strong because it's happening for the same reasons, right? So you're looking for institutional markup, institutional markdown. We used to hold this one over if it closed strongly in our favor, but just market volatility has kept us on the intraday. We like the leverage intraday, and I don't like to get into all the Reg T and the margin requirements at the end of the session. So I like to keep the trading account just intraday. But a lot of guys are doing these multi-session. Another trick you can use is to scan for them on weekly charts instead of on daily charts, and then you essentially set it up the same way. You take the weekly bar is your trigger bar, and then you use your daily bars to establish your stops, and you use the weekly time frame to establish your targets. So yeah, it's a good question, but it's very easy to all my patterns are totally portable. They don't rely on any kind of mathematical manipulation, stochastics or any of that kind of stuff. What they're doing is just taking pure price action and applying it to whatever time frame you're looking at the market in.
What about options? Stuart asks.
I just did a discussion with a group of options traders, and so on the longer time frame in particular, the options guys tend to like this. So what they're doing is scanning for the patterns on the equity charts, and then they just make sure that they've got optionable securities in their basket, in their universe of stocks that they're looking at, and then they use options to control the stock. And you can do some pretty neat stuff. I mean, I'm not an options trader, but a lot of the guys we work with, a lot of the guys who have come to boot camp have been guys who are trading options full time, and they're adding this stuff as another layer to their analysis that they're doing. So yeah, you can definitely apply this. You can do a bunch of neat stuff. Guys are trading futures with these. I've got guys who are trading the E-mini. They're doing the S&P or the NAS or the Russell or gold or oil. So as long as you're sticking to things that are liquid, then it makes for a fairly easy way to set up a trade.
Nayan asked, do you see any setups right now on Apple using your system?
So Apple has been, we work a lot with Apple, but not so much in the as like an expansion of range and volume candidate. It'll show up quite frequently when it's making a big trending move. You'll see a lot of the infield fly setups, right, where it's going to reverse back into the range. You see the double header setup. It's sort of like when Apple pops out of a range, it tends to pop back into the range, and that's where we find the opportunity for a profit on that one. The other thing that you can do quite profitably on Apple is set up these volatility bands. So you go through and you set up the support and resistance levels intraday, and you want to make sure that you've got Apple on a day that it's got about a 20-cent range between the bands. So you go through and you draw all those support and resistance lines on your 5-minute chart, and as long as those are at least 20 cents apart, or don't fudge it, don't make them 20 cents when they're not, as long as they're 20 cents or so apart, then you can get a support and resistance play intraday where you can get 5, 6, 7 trades out of Apple over the course of a session, just saying, all right, if let's say it's made a big move to the upside, and now you've got these 20-cent ranges over the course of the day, then what I like to do is say, okay, my bias is going to be on the long side of the market because Apple's been very strong, and if it gets down below one of these support and resistance lines and moves back up through it again, then I'm going to look to enter the stock at that price, and I'm going to look to exit the stock at the next one of those support and resistance lines. So yeah, there's a lot of opportunity to sort of dig around inside the Apple trade on any given day of the week.
Cool. And then Stuart has to answer the last question in here. Yeah, we are recorded, or actually, James, we are recording this, and it'll be sent out to you later. Okay. Stuart asked a question that's kind of going to feed us into kind of like my part of it anyway. How is this displayed on MetaStock? So, well, as a matter of fact, I do have MetaStock open right now. I'm going to go ahead and kind of minimize this. And I was looking at a little bit of a symbol earlier. Boom. Okay. Which one was it? Not Apple. So, but in any case, just to kind of show you how that sets up, we can actually, if you have the add-on installed, you just click on the Expert Advisor, and let's say we wanted to look at the fastball pattern. You just attach that to the chart right here. Go ahead and click on OK, and if it finds any fastball patterns, there's not any actually that I see on this chart. It'll actually identify them there for you on the chart. Of course, what you're going to want to be able to do is actually identify the patterns. So if I click on the Power Console right here, I can go in and I can run a scan. I've already ran this. There's one scan that you can run to use all of the patterns at once. It's called the All Pattern Scan. And when you do that, I ran it against the optionable securities. But when you do that, it's going to pull out a little bit of a report for you that looks just like this. So you've got the different patterns that are included. Let's see if we can show you a fastball buy. So we'll go ahead and sort it by. These ones right here are all stocks. Instead of looking at 4,500, there's 10 or 15 here. Lumber Liquidator, let's go ahead and open that up, and I'll show you how to look at, or what it looks like on a chart. So we'll go ahead and open that up from a chart, or open up the chart. And here we've got the chart of Lumber Liquidator. If I just attach the fastball pattern here, what it's going to do is it's going to label each time this had a buy or a sell based on that fastball pattern. And this is just a symbol that we picked on the fly. Looks like it's done pretty good at kind of identifying just that fastball that he's talking, and it's worked really, really well on Lumber Liquidators. We also do have, as part of the package, the expert commentary, of course. So if we come in here, it's going to give us some advice on what we should be doing. The fastball pattern indicates a possible long entry. Traders interested in taking advantage of this trade should look to buy Lumber Liquidator at 1868 or higher tomorrow. You should be also look to place a protective stop at a key support level. You should generally look to take profits when this position at a key resistance area. So it kind of tells you a little bit about the pattern. You'll see it talks a little bit more. I'm not going to read it all out loud, but it kind of just kind of gives you a good idea of what the pattern is. Now, the patterns that are included in the add-on are right here. We've got the fastball, the line drive, the backdoor slider, the infield fly, the 3-2 pitch, and the switch hitter. And I believe, Adrian can correct me if I was wrong, if I am wrong, but I believe that includes all of the patterns that are actually talked about in that around the horn pattern scan. So there you go with that. Here's the commentary. I just showed you this commentary. This one also came today on, if you, this was another fastball that happened on Wynn Resorts. So there's a couple of potential opportunities tomorrow. This add-on is, in my opinion, very, very inexpensive. In fact, It was probably, well, it's only $299. That's not a monthly cost. It's a one-time cost. As part of the promotion with the webinar, we're actually going to discount that even more. It's going to be $199. That's a one-time cost. You pay for it, you own it forever. It includes a 30-day money-back guarantee. It also includes trial access to MetaStock. And to get that, you can give us a call at 800-882-3040, or you can visit us at metastock.com/saleschat. So that's kind of how that works. Okay. I see no more questions. Adrian, do you have any final thoughts?
No, I'm gonna say, it's been an incredibly useful plugin for us over the years. It really works well. It does what it's supposed to do. And if you are using it and you have questions about the output that the scans are giving you, then call me. You'll see on the go sign up for that for the free membership at Trader Insight. We're really not going to badger you. Just go to the traderinsight.com/metastock, sign up, come into the room. You'll see how these patterns play out every day, and then you'll also get my phone number. There's not that many people here, so you'll get my cell phone number. If you have questions about the output that MetaStock's given you, call me. If you have questions about how to use the scanner or how to use MetaStock in particular, call MetaStock. They're certainly the best qualified to tell you how to use their software. But if you have questions about the scans and what they're showing you, I'm always happy to talk to people about. I'm always happy to talk to people about trading in general. But if you're looking at this stuff, this is really my passion. So come on in, take a look around. You're going to enjoy the room. It's run by the alumni. A guy named Rick Kipp is in charge of the room. He's not being paid to run the room. It's just a place that those guys all go and talk trading every day. I think you're going to enjoy it. And Jeff, thanks for having me here today, and I really enjoyed doing this as well.
Well, thanks for coming. All right, guys, and thanks everybody for attending. We'll see you at the next one.